Well, it is officially afternoon now, so good afternoon, everyone, and welcome to an open mic version of What's the Point? We've been doing these over the last few months, really, to just give folks a chance to talk a little bit about or ask questions about our programs and things that have been going on at the Business Council. So I thought it might be a fun timing wise to bring in a couple folks from our investments team to talk a little bit about WYVC, which is our venture capital program. And we're going to jump into that in a minute. But before we get deep into it, I just wanted to remind everybody a few of the ground rules for these open mics. So if everybody could kind of take a look at this slide, I'll do my best to sort of narrate to what we're doing. But more than anything, we do want people to engage and ask questions. Uh, Not necessarily anything off limits. However, we do have a couple ground rules in terms of keeping it civil and making sure that we're focused on the problem and the facts in the future, not necessarily the person. And then making sure that we also want to not monopolize time or kind of be too verbose in our questions or our statements so that other folks can have a shot. It looks like today we'll probably have some time to cover a lot of questions. And before we do that, I'm going to give a little bit of a background on why we're involved in venture capital at all. And then I'm going to turn it over to Gordon and Ryland, who are members of our investments team, to talk a little bit more about the specifics of the summit last week, as well as our deal flow report that came out that we launched at the summit in Jackson last week. Um, as many of you know, my name is Josh Dorrell. I'm the CEO of the Wyoming Business Council. And one of the first things I heard when I was hired back in 2020 was this persistent problem around venture capital and how we had folks who were trying to develop a venture capital ecosystem in Wyoming as part of the entrepreneurial continuum, but they were finding that we couldn't raise enough capital to attract deal flow, and we didn't have enough deal flow to attract capital. And it was sort of like this chicken and egg problem, rock in a hard place. You insert your favorite cliche around this, but it was a pretty challenging situation because people were like, well, how do you break an unbreakable problem? And we said, well, that's a really good question. And so though he's not here today, Bert Adam, our investments director at the time, was really looking at the entrepreneurial continuum, and he was looking at where the gaps were. And of course, this venture capital challenge presented itself. And so, as Bert typically does, he tried to focus in on not just, oh, there's a problem, let me describe it. Rather, he dug into the problem and said, how do we solve this? So, you have two of these variables that seem like they're connected 100%, and the only way you can change them is by changing the other. And we said, well, what if we could change one of those dramatically? What would that look like? And so Bert happened to find a federal program called the State Small Business Credit Initiative. And that particular program allows you to use that money for buying equity in companies and applying it to the venture capital problem. So we said, great, we will utilize this federal program, which is about $58 million that we can utilize, and we will test the idea that if there was more money in the system, more capital, that the deal flow would increase. And perhaps we could use this program to sort of catalyze the venture capital in the state to run on its own without that. Now, at the same time, the beautiful thing is we get to invest in these companies and take equity. And when there's some sort of an exit event or some sort of moment that would take that equity and turn it into cash, the state gets that cash back. It's a beautiful thing, right? It is a really interesting thing. And so with all of that, we've been running this program for a number of years now, and I'll let Gordon and Ryland dive into the particulars. But what we're finding is that the indications are that as we have increased the amount of capital and injected capital into that system, we've attracted more capital, and therefore we've attracted more deal flow. And it's possible, and we don't have these indications yet, but it's possible that even after this program and that investment goes away, that the ecosystem could be at a spot where it could self-sustain and it could continue to grow on its own, which in my mind is the perfect place for the government to be. Let's break a problem or fix a problem by really solving a gap and then get the heck out of the way so that the private world can take over. So anyway, with that, I'm going to turn it over to Gordon to clean up anything that I goofed up on the whole process there, and then talk a little bit about the YVC summit that happened in Jackson last week. Gordon?
Yeah. Thanks, Josh. Uh, as a very brief introduction, Gordon Finnegan, Equity Portfolio Manager at the Business Council, and as it pertains to YVC, the co-managing director with Bert Adam, trying to oversee our strategy and manage our investments. To expand on YVC a bit more, YVC, Wyoming Venture Capital, we've seen a lot of opportunity across the state. I think when it comes to startups, regardless of the size of opportunity set, geography, scope, there, at least in the investment world, there's never a shortage of opportunity. What really comes down to is the quality of the opportunities and how you can continue to support them. And I say that because I think we've been really fortunate that we have seen a lot of opportunities, and the opportunities that we have invested in have been fantastic so far. And we love to geek out on that. So much so that we found an excuse to have everyone get together and learn from one another and continue to build that community. We launched our SSBCI program at the end of 22, beginning of 2023, and beginning of 2023 is when it was officially became YVC. We started accepting applications for investment consideration. Having launched in, I think, February, or I think it was on April 1st. We then made our first investments in July of 2023. And today we have 10 direct investments and one partner fund investment. Reason for that being we have two different strategies. One is that we directly invest into companies. And two, we also look to make commitments to emerging fund managers that are committed to investing back into our state. And that is something that we'd love to see. Venture capital, it's more of a collaborative space where when you invest in companies, the more checkbooks, the more able bodies around the table, the more likely it is for a successful outcome. So we have 10 portfolio companies today, and plenty more that are up and coming into our consideration. The gap that we've identified and that we've been investing in sits sort of in the early to middle range of the investment process. So when a startup typically gets off the ground, they're investing from what may be crudely referred to as the friends, family, and fools. So that's whoever wants to invest in your crazy idea off a napkin, whether it's a rich uncle or a roommate from college or a local angel investor, sophisticated or not, typically those checks are relatively small, and they don't always require some massive amount of money. They're just, hey, we're getting started, and you're on your way. In Wyoming, and typically across the entire United States, it doesn't take a lot to be able to find that initial investment or initial investor. So we've had that for quite a while, so much so that we have angel groups based in both Casper and in Jackson, where we've had a bunch of deal flow at least get started and then initially funded. From there, it really fell off because there was this massive gap where regional and coastal capital doesn't want to look at a company when they're still asking for, let's say, 500,000 or $1 million. They want to wait until they're already successful and say already making $10 million, having already raised 15 to $20 million, so that they can then come in and really invest a very substantial amount of money to then say continue to support it and take it public someday. So where we've invested is sort of in that second or third financing round, as we consider it, or maybe they're looking to raise 3 million, 5 million, 10 million, 15 million. The guidelines, both from SSBCI and from our strategy from the YVC perspective, has been we're going to invest in opportunities that have already had a couple of financing rounds and that are looking to raise less than $20 million, because our $58.4 million from SSBCI, we want to be able to spread that around to a lot of different opportunities. And if we go around making $10 million investments, we're going to run out of things to do quite quickly and may never see that return or a larger impact. So taking that back to the summit, it's a long roundabout fashion of kind of getting us there. Is this to recap? Last week we had actually our third Wyoming Venture Summit this year held in Jackson. We're working to have it in different communities across the state as we continue. And as we've grown into our third year, what we've done is tried to slowly grow not only who we'd love to have join, but the connected nodes that we want to continue to build on. Because this community is incredibly nascent when it comes to Wyoming. Venture capital at this scale is quite new, even to our region. They say, at least in the Denver Boulder area, that venture capital has only really been a thing in Colorado for 20 years. It's been a thing in Utah and the Salt Lake City area for maybe 15. And places like Idaho and Montana, maybe 10 or even 5 years. So even though we're really just beginning to build our own statewide ecosystem and community, we're actually not that far behind. We don't have the large populous areas, but fortunately we're able to not only continue to build across our founders, our CEOs, our funders, our ecosystem builders, but this year we were able to pull in a little bit more connectivity, where funds and community champions from the surrounding states were able to join us and continue to make that network even bigger. Because a lot of the struggles that we have in terms of kind of referencing back to, hey, where do we go once we need to grow big enough to justify someone from New York or California, even answering an email or answering a phone call, as our capital needs grow, we can really start to support and grow with one another. So that's the basis of this year's summit, and as a part of that content and as a part of us continue to put us on the map, is our deal flow report, and I'll pass it over to Ryland to maybe help explain that a little better.
Yeah. Hey, before Ryland jumps in, really quick, I just want to give folks in the audience an opportunity to ask any questions. So feel free to raise your hand with the little react button at the bottom, and then we'll get you off mute. And if anybody has a question for Gordon or I about what we've covered so far, be happy to dig in.
Lots of
All
power,
right,
and I'm sure we
cool.
could go
Well,
for
with
4 hours.
that, yeah, you did such a good job, Gordon. Before we go into Ryland's, I just want to kind of say that, those summits started out pretty basic, pretty bare bones, just kind of getting people involved and engaged, and it's grown quite a bit each year, right? Quite an astounding growth rate. And what I can tell you from being in the room with all those folks throughout the summit is there's just so much energy and so much excitement about Wyoming and about how entrepreneurs can play such a big role in our economy that, gosh, if you don't leave one of those events and just be pumped up about Wyoming, you're going to want to go see a doctor because there might be something wrong. So, I am not a doctor and I'm not giving medical advice right now, but I am telling you, it is pretty astounding how much energy is in that room. And with that, I'm going to turn it over to Ryland to talk a little bit about the deal flow report.
Yeah, thanks, Josh, and great job, Gordon. I think you covered the definitely the high level takeaways from the work we're doing at YVC. But I guess to give a little bit of context around the deal flow report and why we put this report together, sort of speaking back to Josh's chicken and egg problem, where there's not enough capital in the ecosystem to support the number of startups, and there's not enough startups to attract sophisticated amounts of capital. This deal flow report is really our means of being able to have a conversation with anyone that's interested in potentially investing in the ecosystem or starting a company in the ecosystem, or maybe it's a service provider that can provide support to these startups in the ecosystem. And really, this deal flow report captures the activity that's happening in Wyoming, where if you look at public data sources such as PitchBook, Crunchbase, a number of the other platforms out there, the data really shows that Wyoming is attracting large amounts of capital where that is not always seen in the physical activity. So with the work that we're doing in YVC, we try to filter out that data down to the companies that are physically operating here in Wyoming. So before getting too deep into the data here, I wanted to share my screen and start off by showing our report from 2023, where we can look back and see the initial activity in our ecosystem in our 5-year look back. So this graph displayed here is deal counts by sector in Wyoming. And the big call out that I want to make here is in 2019, the total activity in Wyoming's ecosystem was represented in 12 total deals. These deals can range from accelerator deals all the way up to growth rounds, but including that accelerator and early stage activity, Wyoming saw a little over 10 deals. I believe this is 12 deals here, but this is really exciting to see this year's deal flow report when we see activity like this in 2025. So looking at the activity in 2019, there were 12 deals. The increase in activity from 2024 to 2025 nearly added that entire base that Wyoming started with in 2019. So speaking to the activity that we see in the ecosystem, we see a ton of diversity across these sectors, and it really speaks to Wyoming's ability to be agile, and we're not dominant in one specific area, whether it be biotech or energy. We do see a lot of strength in SaaS, IoT, energy, things like hardware. And it's really cool to see that the activity in Wyoming's ecosystem has really stepped up from that 2020 or 2019 figure to now 2025, where there's over 35 companies operating and creating deal flow opportunities in Wyoming. So next, when we look at the deals by stage, this again is counts. So this will match up with those numbers, those figures on the previous slide. But there's a really exciting narrative that this graph tells when we look at the stages here and take out the industry or sector considerations. When we look back in the data, we can see some early stage activity such as accelerator and pre-seed rounds that in the following years lead to additional seed rounds or Series A rounds. So in the teal and turquoise colors here, we see those early stage deals that will lead to uh, larger funding rounds in the future, and it may be a Series A, a Series B, a growth round. Whatever that looks like, it really speaks to the progression of the companies that are in Wyoming and building here, raising capital to hit those milestones and hire um, great talent to execute those milestones along the way. So it's really exciting to see that there's a ton of accelerator buildup in 2025, which if we layer on the trends that we've seen over the past few years, we should see robust activity in the seed or Series A gaps as these companies raise for the next 2 years of runway and attack those milestones. And so I mentioned that 2-year fundraising window that we see in the startup ecosystem. When we look at the capital amounts raised by each sector here, that 2-year funding cycle is really prevalent. But across sectors, there's still a ton of diversity, still strength in SaaS, IoT, hardware, energy. But the really exciting call out here is the amount of capital in 2025 deployed into Wyoming startups is just under 125 million. However, that does not include an $800 million transaction of representing a financing round raised by Kraken, the crypto trading platform, which is now considered a Wyoming company following the blockchain legislation that continues to attract fintech and blockchain companies across the globe. In 2019, when we first established this report, when we look at the capital that was deployed in those 12 deals, that was around $20 million in reported capital. In 2025, that increase is now 125 or is 125 million, representing over or almost a 5x of that 2019 base that we considered when we started here. It's also really exciting to see those early stage rounds that have been raised previously going on to raise larger and more sophisticated capital rounds in 2025. So when we look back at the data here, we can see some of the phasing out of the seed companies that are moving into, call it a growth round or the Series A rounds here, where likely the companies that are represented in the Series A column here, such as Frontline Wildfire Defense, who closed a $48 million Series A financing in 2025, they are likely pictured in this data in the seed column in 2023. So it really speaks to the ability for these companies to start in Wyoming, raise that early stage funding round, and then allow for YVC to help be a bridge in their sort of capital raise journeys, where they can go attract sophisticated capital, find lead investors, and YVC capital can be catalytic to that private investment alongside these companies. So this is all fantastic and great, but what does it really look like when we take a look at our neighboring ecosystems? And I just want to throw out that this data does not include the same filtering that the YVC team has done on the previous 4 slides. But we see some really exciting things in this data, even given that context of maybe there's some activity that's reported in Wyoming that's not actually physically here. So when we look at ecosystems like Montana and Idaho, they're very similar to Wyoming, where there are quite a handful of companies that are VC backed. The amount of capital deployed is relatively in line when we consider that Kraken's 2025 financing round was over $800 million. So that's almost a third of the capital deployed in Wyoming from that consideration. But when we look at the number of people employed, that's where we see some interesting trends as far as capital deployed and those people deployed, where when we're looking at ecosystems like Utah and Colorado that have very robust uh, venture ecosystems and hubs like Salt Lake City and Boulder, we see that activity in those trends of deployed capital leading to outsized employment for those companies as well. So it's really exciting to see that Wyoming is young, as Gordon had mentioned before, but we are competing with our neighbors, not only from a high level, here's what the public data says standpoint, but also when we filter that down and get into the weeds and find out what companies are physically here and hiring and operating in the state. Both of those show very positive trends, leading to the key takeaways of Wyoming's deal flow report this year, saying that Wyoming is not underperforming. It's really an emerging ecosystem. When we look at those neighboring ecosystems, Wyoming is showing some very strong signs that we're growing and making some very smart investments that are continuing to raise additional fundraising rounds, hire people in the state, and work towards that large exit opportunity in the future. Additionally, we see those Series A rounds or early stage rounds that have been raised previously transition into more growth rounds or Series B rounds in the 2025 data. And of course, we do see that accelerator and pre-seed buildup in 2025 that speaks to the opportunity that we'll see in the next couple of years in Wyoming's ecosystem as well. So I think that covers Wyoming at a very high level, but all that to say, Wyoming is no doubt emerging and not underperforming.
Cool. Hey, thanks, Ryland. Let's pause there for folks to ask questions on the deal flow report or anything else. Um, anything anybody's got? I've got a bunch of questions for both these guys. So we'll jump into those if nobody else has any questions. All right. Okay. I've got a question for you, and either of you can answer this. So, talk to me a little bit about the what we might call the leverage ratio. So, for example, we have say $58 million that at some point over the course of the years we can invest in these companies, but we're not the only checks at the table, right? So what is that? Tell us a little bit more about the leverage and the money that we're bringing into the state with these investments, and how is that how is that making a difference?
Maybe I'll jump in on this one, Ryland, and then if you could kindly prepare a slide to share. Uh, so to your question on the leverage ratio, one of the main goals of SSBCI was to help drive private investment into companies across jurisdictions across the United States. So, as a very quick recap on SSBCI, the State Small Business Credit Initiative, it was $10 billion that was allocated across the US, the US being inclusive of states, territories, and tribal governments. And with the help of our investments director, Bert Adam, Wyoming's allocation of that 10 billion is our YVC fund. There's some reasoning there beyond the large need in this space, but also the other programs that are offered through SSBCI are programs that we actually already have overlap with at the Business Council through our various loan programs. So that would have been a duplicative effort. Anyways, so in what they call the equity SSBCI programs, there's some federal criteria that says, all right, if you invest in a company, you can't be the one that's providing the majority of the money. That just doesn't make sense. That would be as if it's non-market driven decisions being made. So depending on the size of the investment, what they've what the U.S. Treasury mandates is that our funds cannot represent more than 50% of the financing or more than $5 million. And kind of as we talked about before, we have no interest in just investing all that money into just one or two companies. That would make no sense. And if we're doing it by ourselves, are we really helping achieve anything other than investing in just a few companies? So federal guidelines says no more than 50%. From our program standpoint, or what YVC standpoint, we've had an internal goal of saying, hey, we're going to try and invest 20% in financing rounds. So maybe we have the ability to invest $1, $2, $3 million, but we want to be in there with other investors, other industry leaders that can really help support these companies across our state, and frankly, bring more capital into Wyoming. So that leverage ratio is really our dollars alongside private investors' dollars. One of the long-term goals of SSBCI is, even with that 50% federally mandated limit on financing rounds, is that over the course of these companies' lifespans, that for every dollar that we invest, that we eventually unlock $10 of private investment. Now, we've been super fortunate so far that we do have a great ecosystem of CEOs and founders that frankly maybe no one else was really given a fair shake to, and we've been able to help support them with our various partners. But we've already seen such tremendous growth that, let's say, our initial investment, as you can see here, is a little over 22% of the financing round in which we participate, because they can then continue to go out and raise more money, and we may not participate, or they may go over that 20% limit. For our dollars invested, we've already unlocked $9 of private funds into the companies in our portfolio. So that's us using our dollars to leverage private investment. And
Yep.
I think the goal was that by, was it 2029, that we'd be 10 to 1. We're already 9 to 1, and 10 to 1 sounds fun, but I feel like we could even have a higher leverage ratio if we wanted.
Yeah, I think you're right. We could definitely leverage more money, and I think that's a good thing because a couple nuances that I might just hit on, and then I want to ask a good question that Kristen asks about our partners. So a couple things to think about is that we don't want to be the only check at the table. We want to encourage other checks to come to the table, and actually, we would prefer to get pushed out of a round, right? So if we're not necessary to close a round, we have been pushed out of rounds, or our percentage has even gotten smaller because more of the private side of the world is really working in that round. We want to encourage that, but if we get pushed out of a round, we're actually happy, right? Like we want to encourage the investment and let the private market do it. The other part in that is that we don't open rounds, we close them. And I think that that's another distinction that a lot of people might sort of like, well, what does that mean? Well, we're not the first check in, we're the last check in. So we close rounds because we know that businesses want to close a round. And if we can help close that round, then they can get to their growth stage or their next set of goals faster. And so we kind of encourage that. And so I think just some of those distinctions are, I think it's a really well-crafted program. And that way we can play the role that's most beneficial to the ecosystem and not necessarily, we kind of see ourselves as an investor, but also an ecosystem builder. And we have to balance those two things. And I think that's a really a really good distinction and a lot of discipline required by our team to do that. So the question for either of you is, can you give an overview of how companies get to the point where they're ready for a YVC investment? Because we have a lot of partners and resources in the state to support startups and high growth companies. So, kind of maybe, you could use your hands or you can use if you've got a graphic Ryland at your fingertips, or maybe we should call you Ryland GPT if you're creating that on the fly. But if you could sort of like walk through the startup or business continuum from an idea to where they're getting a YVC investment until they're not getting YVC investments. Maybe that would help. Kristen, is that a good synopsis of your question? Two thumbs up. Excellent.
Alan, do you want to jump on this one?
Yeah, sure. Sorry, I was having a hard time finding my mute button there. Uh, yeah, Kristen, I think that's a very interesting question, and one that also is maybe not so straightforward of an answer. Startups are interesting companies. They are companies that are driving for those global and or national markets that have the ability to 10x to maybe even 100x an investment in 5 to 7 years. So during that process, these companies are taking on worldwide problems and taking really boiling them down to smaller bites of the apple where they can create measurable metrics around attacking a problem and how the steps that they're going to take to get to that big hairy scary problem that these companies are solving. And they do that by starting off with an idea, and maybe that idea is back in the napkin. They're scribbling some notes, maybe at a coffee shop with Josh, getting some ideas back and forth and getting some good feedback there. And that early stage process is important to have the ideas on the back of the napkin and get some feedback from those that maybe are interested in investing or interested in helping out, because they get a lot of validation from outside opinions in that, and get a lot of advice during that early stage process where the um, the founders have to find themselves is, how do I get from, hey, I'm going to attack this worldwide problem and it's going to require me raising $200 million in capital over the course of time. How do I chunk that down into a more palatable investment opportunity that I can then speak to and go pitch on? And I think that's where YVC really sits in that spectrum of, we're we sit after that first couple of fundraising rounds. Maybe it's one, maybe it's two, maybe it's three. But the YVC capital is essentially intended to be deployed along or into a company that has already established the machine that they call, that can then just be capital poured onto the machine to create a bigger fire, if we want to related to a fire instead of a machine there. But really, all that the companies need at that point is additional capital, because they have those proof of concept pieces and they've proven some model to an extent that investors can feel comfortable with supporting on that larger growth journey. And I think that's really where YVC sits, is not necessarily at that early stage, back in the napkin type validation, but the call it mid to growth stage rounds, where companies have already gotten that early stage feedback. They've gotten a couple of investments from private investors and they need additional capital, call it 5, 10, $15 million to then go attack the next set of milestones and work towards a larger capital pool to be a very slim piece of that, call it $200 million capital raise journey. I maybe walked a little bit around on that answer. So maybe Gordon, if you wouldn't mind tying it up.
Maybe if you don't, maybe what I'll do is because we actually got another question I think that ties into this. So I like to think about it like this: is that there is a continuum, and from that back of the napkin idea, or trying to figure out product market fit, and then getting some customers and going through those different stages. There are a number of different programs in Wyoming or partners in Wyoming that we work with. So, gosh, it could be at the university. They might work with the Center for Entrepreneurship and Innovation or the folks at the UW College of Business on some of their programs that help entrepreneurs sort of get to that next stage. It could be Impact 307, or it could be people like Bailey at GBeta, who's on this, people at Startup Wyoming. SBDC is also a partner for a lot of these companies at the very beginning. And so we have a number of competitions and companies, and then Startup Wyoming looking at this as well, that are kind of helping people start out in that journey. And it could be they're getting services like help with pitches. They're getting help with connecting to investors. It could also be money. In fact, we have our own program called Kickstart that can help with some of that to give people a little bit of a boost and get them to the next stage. I'm going to go completely off script here, and I'm going to put Bailey on the spot because Bailey at G Beta has been playing this game for quite a while. And I feel like because she is a WBC alum, that we could turn the mic over to her and talk to her a little bit about what she sees at the beginning stages before YVC and kind of the world as G Beta has seen it. Bailey, are you game to jump in?
I'm game. Can you hear me?
Yes.
Okay. Didn't know if I had a microphone on my headphones that I was wearing. Sorry, repeat the question because I was walking around.
No worries, Bailey. I was hoping you might talk a little bit about how where folks like G Beta, your organization, fits into that early stage where you're sort of helping people with product market fit as well as sales and getting them from one stage to the next. Do you mind talking a little bit about
Sure.
that?
Yeah, absolutely. So G Beta Wyoming is a free accelerator, and we are a program of a company called Generator. It has a weird eight in the middle. I was not consulted on the eight, but it is a national company running accelerator programs all over the country. Some of them are investment for equity type of programs that you may have been familiar with like a Techstars or a Y Combinator. Some of them are the G Beta version, which is sort of the earlier stage version of that. We teach the math, milestones, metrics of venture capital, kind of help founders map things out, decide if venture capital is even really the right uh, journey for them, if they really want it,
Mhm.
and then introduce them to a bunch of investors as well. So we prepare them for pitching, and then they get to meet one on one with 25 or more investors at the end of the program, whether that's for feedback from investors or actual checks, some of both. I do try to find active, investors actively looking to write checks for those meetings. So most of them are that version, but sometimes it's feedback as well from real live investors. And then alumni of the G Beta program get access to the Generator network for, as long as that's helpful to them. So we've got a whole global network of mentors, investors, other founders, corporations, corporate venture capital, things like that, that they get access to. Did that cover it? Anything else I
Yeah,
wanted to talk
that's
about?
great, Bailey. And what I think and part of this is like we're working closely with Startup Wyoming to really kind of map this out and to also find out where the gaps are. And I think a lot of times we get this question where we're like, where are all of these areas of duplication? And do we want to are we duplicating efforts? And while I appreciate that. I think we're in the beginning of this sort of like primordial soup of what the ecosystem is going to look like, where we know some overlaps, but we don't want to create more gaps than are necessary. And we actually want to figure out where all of these things fit in. And just because we have more gaps than overlaps, we're going to have those. And I don't necessarily think that having multiple entry points or people who sort of cover a similar area is necessarily a bad thing. Something that Bailey mentioned that I think is really important is that part of their process is to help people understand, is venture capital even right for you? Because there are so many businesses out there that could create a business that will last forever and ever and do really well and never utilize venture capital. And I think that counseling that a group like G Beta does and that Bailey understands is really, really key to really kind of making sure that everybody's not, oh, I need venture capital. Well, why is that? Are you approaching a global problem? Do you need to scale that quickly? And again, Bailey would be an expert of that. Um, Really quickly, unless we've got a bunch of questions, I want to touch on something that Bailey and I were talking about at the summit, um, as it relates to sales, because that's a topic that I care an awful lot about, and that companies, that's how you really start to determine whether you have a product market fit, is whether you can generate some sales. And Bailey, again, your microphone sounded fine, and I'm going to put you on the spot again because I thought you did a really good job of explaining how a company progresses from making that very first sale all the way through to being able to do it reliably and scaling it. Can you walk us through those quick stages? I like I said,
Yeah,
I have a passion for sales, so I'm geeked up about it. Do you mind sharing that?
sure. Yeah. So one of the key topics that we teach in G Beta is there's like a hierarchy of sales. So you start with sell one thing, sell a dollar, sell one subscription. Next from there is sell reliably. So repeat that sale, create a repeatable process, have it sell over and over again. So you've got sell and then sell reliably. The next step is sell at scale, which means, to all of the customers that you hope to reach. That's the third step. And it's important that these go in order. Sometimes people want to skip steps, but it goes sell reliably, sell at scale, and then sell at margin. And that's our way of helping founders understand that selling at margin in the very beginning, meaning making the profit that you hope to ultimately make, is probably skipping, almost always, is skipping several steps. So first, sell one thing, sell it at a dollar, sell it at cost potentially, then sell reliably. Do that over and over again in a repeatable process, and then sell at scale. Like start selling much broader, and then sell at margin. So that's the I guess
Yeah, I
easier
love
said than
that.
done
And
process for sales.
yeah, and I love that for people who might watch this later or who are thinking about it, because I think people tend to get sort of tripped up or they get so focused on their product that they sort of forget that you have to sell it to people in order for it to matter. And you have to get it out there in the marketplace to really understand product market fit. And a lot of people will tell you they like it, but once you don't really know until they part with dollars to buy it. So I think that's a really cool thing about this whole process is that we do have partners who are helping early on. Some are helping at a really, really early stage, before people even have ideas, all the way back to the community colleges and the university system. And then we have people who are helping them along the way and helping them pivot to a product market fit that fits that matter. And then the whole sales game just really makes me excited that you're helping people understand, sell reliably, sell at scale, and then sell for margin. I love that. And then getting to a spot where you might approach a big market, where you might need to scale your entire operation quickly is pretty awesome. That's where YVC can fit in. But again, I also want to touch on something. We've done 11 deals, it looks like, based on the sheet that Ryland showed. Yet there are 36 deals posted in the state. And I think it's important to note that we're catalyzing that. We're not creating it. And that we think that by catalyzing it, we can let it take off on its own at some point. I don't know when that will be, and we want to be careful not to start it up and then shut it down too early. But I think we're seeing some good things happen. Let me ask Gordon or Rylan, have we been involved in companies, because we have a very small band in the whole we'll call it the entire investment space around a business. Have there been companies that we no longer get to invest in because they've gotten too big and the round sizes are exceed our limits and things like that? Has that happened where we've had somebody sort of graduate from YVC?
Yes, we've had a few now, which has been wonderful to celebrate. To your earlier point around getting pushed out of a deal or getting pushed out of a deal because there's too much demand. What may even beat that in terms of more and higher excitement is not even getting a chance to look at it because it's too big and too far along. So few of our companies have reached that level, and to the point you just made as well in terms of how many deals there are on the deal flow report. Not only do we not represent all of them, but some of the deals that we've even done haven't even made it onto the deal flow report. So we know there's more out there, just because we do use publicly available information to build it. And the continued momentum is super exciting to watch, and hopefully it'll continue to just bolster more talent for more future startups going forward.
Yeah, and Bailey, your point about that partnership with Microsoft and how for a long time they funded that G Beta program as a way to really get kickstart things in the state. I think that's a really fantastic thing that has happened in there. One other thing I wanted to ask about or maybe touch on a little bit was just sort of this idea of how does an entrepreneur fit into the economy? And why do we care about somebody coming in and building up a company and exiting that company? Why is that an important thing for economic development? And I guess I'm thinking about wealth creation. Like, tell me a little bit about how wealth creation should fit into our the whole economy. Why does it matter to Wyoming towns?
Investors support founders. Founders exit, returning funds to funders, but then founders make enough money from exits to then become funders and then support founders. Uh, at least that's how we've drawn it up, and we've seen it in other ecosystems happen that way. Uh, and I think the really important piece to note there is intellectual capital grows alongside financial capital. So even though you're a founding CEO that took a company huge, gets to go right off into the sunset, they have entire executive teams that are with them upon that exit as well, and they have equity stock option plans. They get a little bit of financial capital, at least a little bit in comparison to maybe the founder, but then they've then learned and seen it all in the trenches, and maybe they can't ride off in the sunset yet, or maybe they can and they just choose not to. They go out and then spin up their own company. So it's
Yeah.
something that
We've
we've already seen a little bit of, and are excited to see more of.
Yeah, we've seen some of that in the state, but also there's some notable areas of the West where maybe a company grew and it had a particular technology set that they utilized, and then they sold, and then all of a sudden there are a whole bunch of companies doing similar things and creating a cluster in an area because they were there for a reason. They like to be there and they still want to, they have the means to start new companies. They have the means to put money back into the communities that they live in. And I think that that's an element that sometimes we forget that wealth creation can really make a difference in our communities in Wyoming and create a lot more jobs as those things, sell off and then spin into new things. So I think it's a pretty exciting opportunity for Wyoming to see more of that and for us to catalyze that. Super cool.
The two best examples of that are Durango, Colorado, and Bozeman, Montana. Both saw startups that sold for over $1 billion. And if you are aware of either Bozeman or Durango at the time that those sales happened, what those communities look like, you could drop those communities easily into Wyoming and they'll look just like a Casper or just like a heck, even a Cody or a Gillette. Like I think they're rife with opportunities. Here's a quick snapshot of Right Now Technologies, which is the company that was based in Bozeman.
Yeah. Yeah. And so that old Ryland GPT quickly created a graphic apparently to demonstrate this whole idea of that kind of that tent pole where, hey, we had a really massive exit for a company spun off and created a bunch more entrepreneurs who were now had the means to start their own and then the relationships to attract more capital. Again, I think this fits in the puzzle of economic development. It's not all this. It's so many more things, but this is something that I think a lot of times we sort of forget that how important it can be to creating a lot of great jobs in an area. So it's super cool. Well, we are approaching the 1 o'clock hour, and that means we are wrapping up this version of open mic for What's the Point. Thanks for joining in, folks. Appreciate the help from Bailey at G Beta. Great job helping out Rylan and Gordon. Great job on really creating and figuring out a way to solve what some people would consider an unsolvable problem in Wyoming and being able to continue to grow it each year and take some of the challenges that an entrepreneur might take when you're starting up a fund or when you're starting up a business and really take it head on and start building something that matters in our state. So thanks everybody for joining. Thank you all for being part of it and thanks for Gordon and Ryland for creating some really cool stuff. Thanks.
Thank you, Josh. And thanks, Bailey.